The Central Bank of Nigeria today announced a new flexible forex regime plan for the Nigerian financial market. It was an opportunity for the Central Bank Governor, Mr. Godwin Emefiele, to give further insight into the features, which include a single window structure, introduction of primary dealers for the forex market, futures market, amongst others.
We will have non-primary dealers and primary dealers. The guidelines for the operation of or qualification for being a foreign exchange primary dealer will be on our website, I'm sure immediately after this press briefing. There are a number of qualifications, either the size of the bank or the size of foreign exchange transaction it has handled before, the level of liquidity, the extent to which those banks have complied with central bank guidelines, regulations in the past, the level of preparedness in terms of being able to provide all the soft and hardware that is needed to operate in a very transparent manner that can handshake with the Reuters, Thomson Reuters, and FMDQ software. Those will be the basis. But from what we think, what we see, we do not think there will be more than very maximum, maybe 8 or 10 primary dealers. What that means is that you have what we can call grade A dealers and you have the grade B dealers. By being a grade A dealer, which you call the primary dealers, does not confer on you any special preference other than the fact that the size of trades that the central bank is willing to deal with you will be larger than the trades for those who are going to be dealing as non-primary dealers. From what will be published, you will find that the level of trades as a primary dealer will be a minimum of $10 million. So what that means is not about talking about the standard trades of those days. It's about $100,000. And then you say, I close on you for $100,000. We're talking about minimum of $10 million. So to do that, you have to have a strong capacity. You have to have prepared yourself. You have to be ready to play with the highest level of professionalism and transparency, and that no one is going to take any nonsense from you if you decide to breach the regulations or the guidelines. And that is the reason I have said that we will expect those who are going to deal here to be people who can deliver on their words. And they must be people who understand the implications for whatever decisions they take regarding the size, maybe I'm talking about the volume, and the exchange rate they decide to quote. It is intended to ensure that we don't have speculators, we don't have rent seekers who just want to come into the market, particularly the primary market, to just come and start auctioning and stacking on prices against each other for their own, what I can call, private benefits. The FX futures market is an innovation which we have introduced to moderate volatility in the foreign exchange market. It's a situation where it makes it easy for you as a businessman to plan your business and the rate at which you want to do your business. You do not have to fear that maybe, this is what has happened because of what is happening to crude prices today, that, you are afraid that you may not be able to source your dollars in the next 3, 4, 5, 6, 7, or 9 months. And so for that reason, you begin to take some precautionary decisions, as in saying that I want to front load the demand for my foreign exchange. You can decide that, look, I have pegged the price of foreign exchange, or I've pegged the price of my product based on an exchange rate of X. And you lock yourself on to a futures rate with our primary dealers or even with the non-primary dealers. Once you lock yourself to that rate, let's say you lock yourself to a rate of say 200, or you decide to lock yourself to a rate of say 230 or 240 or 270 or 280, as the case may be, all you need to do is just go back to your business once you have locked yourself into a futures transaction through futures deal. If in the next 3 months, if that rate turns out, if you are the rate you agreed in locking off your future deal, you say 260, right? And the market is doing say 270 at that time. that 10 naira gap, the Central Bank of Nigeria will give you the naira equivalent of that 10 naira gap, such that you are not seen to be losing money by waiting for the next 2 to 3 months to procure your foreign exchange. What that does is that we want to see how this shifts your demand from spot to the time when you truly need it. Not that you need dollar in the next 3, 6, 9 months, you begin to ask for dollar on spot, thereby creating pressure on the demand for the dollar at the spot market today. That is just in brief how the futures market would work, and the details will be unfolded in the guideline that will be provided in due course. And indeed, we'll be engaging more and more, both with the banks and those, both primary and non-primary FX dealers, about how this will work, because we are determined to ensure that this work, and I'm very optimistic that it would work. And let me say this, the Central Bank of Nigeria today has foreign reserve of close to about $26.5, $26.7 billion. This is certainly, substantially higher than the level of any pent-up demand that is in the market. Right? So the market, and we are making efforts to improve on the supply of foreign exchange in the market. We are also optimistic that the steps that we have taken today will help to further deepen the market and also get foreign exchange into the market. We are very hopeful this will work. But we are saying independently, Central Bank is working to ensure that we even improve the level of supply on its own into the market. So those demands will be met at the market. So there is no need for everybody to rush at the same time into the market. Indeed, you may find yourself losing money when you rush into the market and take some urgent emergency decisions that will hurt you, hurt your profit, hurt your balance sheet, and ultimately, if you are taking a bank loan, hurt your interest charges on your bank loans. So we need to be very careful, and that is the reason we have provided opportunity for you to go to the futures. If you are not, don't worry, just take it easy. I repeat, take it easy. If you're not too sure, go to the futures and commit yourself to a rate. You will find a deal. All the banks will provide you with FX futures rate. Whether in the next 2 months, 3, 4, 5, 6, even 9 months, 1 year, they will provide it for you. So with that, you're able to go about doing your business without necessarily bothering. And we've committed ourselves to the level of guarantees to say, it's like a bet. If the rate that you get eventually on the day of your futures maturing is higher than the due date, we will pay you the difference. But if the rate on that day is lower than the due date rate, then you will pay us the naira. But we're just trying to say, be calm. No need to worry. Everything is well. Thank you.
With the flexible forex plan now unveiled, the markets will be expecting efficiency in implementation from the central bank, while it is expected it will also boost confidence from international investors, even domestic, as well as revive the Nigerian economy.